And now, AM 650 presents your source for leading-edge news and information on today's hottest products and services. This is Experts on Call on AM 650.
Hello, and welcome to Experts on Call and Quay Pacific's Talk About Strata. I'm Sterling Fox, joined in studio by the Executive Director of the Condominium Homeowners Association of British Columbia and the Vancouver Province condo columnist, Tony Gioventu. Good to see you again.
Well, good evening, Sterling.
And you've brought a guest with you. Please introduce Gordon to our audience.
Gordon here is from CMW Insurance. They're a brokerage company who provides insurance for strata corporations and works with strata management industry, individual strata councils, helps them with their risk management and placing their policies every year.
And Gordon Lee, welcome to you.
Thank you. Thank you for having me here.
You're a strata insurance specialist, which would suggest the topic and general direction this show is headed. And of course, we're going to talk a lot about earthquake insurance and other insurance specifics, but let's start with earthquake, Gordon, because, well, we are on the ring of fire here in this part of the world. We've seen earthquakes recently off Port Alice, off Haida Gwaii, down in Guatemala. This is all in the last few weeks. About a month or so ago, 500,000 of us across British Columbia participated in something called the Great Shakeout, which was supposed to make us more earthquake aware. Of course, you're never really earthquake aware until after the fact, are you? And that's part of the problem, isn't it?
Yes, absolutely.
So what do you do as an insurance specialist with strata clients to, get them a little more tuned into earthquake realities and insurance realities associated with that?
Well, what we do is we try to educate the clients more and make sure that they're aware of it and know that what coverage they have and what they're responsible for with regards to deductibles.
Okay. Now, here's where it gets a little interesting. And Tony, you brought along a copy of the Strata Act, and I appreciate that. And if you don't mind, I'm going to quote on the matter of insurance. It says, what does the Strata Corporation's insurance policy cover? And it's a really short answer. At a minimum, the Act requires the Strata Corporation to obtain and maintain property insurance and liability insurance. I thought that was kind of the stepping stone to a whole raft of responsibilities, but you said no, that's it. In a nutshell, that's all the Strata Council is responsible for. But that's a job, isn't it?
Well, and it really covers everything.
Yeah.
Because what it means is that the Strata Corporation has to obtain and maintain insurance on all of the common assets that the Strata has to insure. And common assets are defined in the Act as basically everything that was built or installed by the owner-developer that's a fixture on the property.
Okay.
So think of it the day before you move into the high-rise building, before the first person moves in. All the property the Strata owns, each Strata lot, the original flooring and carpeting and the drywall and the insulation, counters, cupboards, everything that's built into the unit is something that the Strata has to include as part of their insurance for full replacement value.
Okay.
So the confusion often happens in the industry is people think that the Strata has to maintain those things as well. And this is where that whole concept of in a Strata, your home is not your castle comes into play. The castle itself has to be maintained by the Strata Corporation for insurance.
Okay.
The Strata has to ensure that in the event that there is a loss, a fire, water damage, earthquake, whatever the loss is, that what was there originally is replaced. So that's the purpose of the insurance.
Now, Gordon, Tony has many, many times since we've started doing this show pointed to the importance of the two types of insurance that are at play in every strata in British Columbia. There's the strata insurance that Tony's just described a little, and then there's homeowners insurance. So as the insurance expert, explain the difference between the two and why it's so important for the individual unit holder to have insurance on his or her unit in addition to the coverage that Tony's just described.
Well, I guess it's that when people then move their content in and the basics of it, most people say, well, those items I bring in, it's my own possession.
Sure.
And so then we say, well, you need to insure that and also ensure the liability behind it. What's becoming more important over a period of time is that the deductible, the Strata Corporation's insurance, is being levied back to the unit owner when they're found to be at fault or comes out of the unit, depending on the bylaws. And so now that this unit owner has got to cover for their own contents if they get charged this deductible, as well as that if they need to move out temporarily to find a place to live,
Right.
right? Or if they cause damage to other unit owners' property and they get sued. So that's kind of like a personal insurance that they got to provide stuff. So property, liability, which includes loss assessments, additional living expense, and things like that.
Okay, now let me stop you right there because you've already mentioned one word that causes the red flag to go up in my head, and that's deductible. And the only reason the red flag goes up, Gordon, is because I don't understand deductibles. And as I come to the table on this program, Tony says, "You don't think you think you don't understand now? Just wait till this show is over, because there's a lot going on here." So let's start, Tony, and talk about deductibles, because there's, as Gordon just said, there's a lot of confusion in this area.
Well, one of the ways that the insurance industry manages risk and cost is by placing a deductible amount on an initial claim. So we frequently see that in buildings, a multifamily apartment building, let's say a high-rise building.
Okay.
It will have a policy, a brand new building, it's under warranty. You know, you're starting out from the first day. It will probably start with the deductible, for example, for water escape of $5,000 or $10,000 for a claim. And understand that the risks are substantially higher when you start stack units on top of each other.
Okay.
Because water and gravity do horrible things. And so
always together.
And always together.
That's right.
And so you know, it's not just a simple risk that's going to be a $250 deductible because the damage is only isolated to that unit. It's frequently compounded to 3, 5, 10, 15, or 20 units or more. And so the risks and the risks and costs of insurance are so much higher. So we're looking at deductibles that contemplate we're actually dealing with multiple units.
Okay.
So we end up having a water escape. It could be a simple thing. Someone's toilet is overflowing. They've left for work for the day. It's flooding out the building, gets shut off. There's water damage to 4 or 5 units.
Right.
That insurance deductible is a common cost to the Strata Corporation. But the Act says that the Strata Corporation is permitted to go to court or to recover a deductible if an owner is responsible for the claim. And responsible can simply mean it occurred from your strata lot.
Oh, okay. You didn't have to leave the bathtub running or anything like that. If it happened in your unit, you could technically be deemed to be responsible.
It may not be anything that's negligent. It may not be anything that was willful. It could simply mean that as a result of your appliance. We have a bit of a problem in the industry right now with some new appliances that are overflowing. So everybody's being warned, don't run your washing machines and leave.
Oh,
and so we have a little bit of an industry problem in that area with some new appliances. So, you know, we're seeing a lot of substantial claims. Well, the appliance provider is understanding there's a bit of a defect and a problem here. But if you turn your washing machine off, go to work, and it turns out the building is flooded or there's damage, the Strata Corporation is very much in a position to recover that deductible from you now because you're responsible.
So let's just say, again, I'm struggling with the concept of deductibles in the first place. Let's just say you said a nice round number, $10,000 on a brand new building. That's the deductible. So I do my laundry. I turn on the washer and head out to work, and of course I create this horrible mess. So am I the guy who left the washing machine on and started all of this? Am I on the hook for the $10,000 deductible because it happened in my unit?
If it occurred from your unit, you are probably going to be responsible, yes. So the Strata Corporation pays the original $10,000 deductible to the insurance company because it's a claim to the building.
Right.
But they're going to turn around and they're going to send you a bill for this.
Okay, the Strata Council, in the meantime, gets the appropriate repair people in and they get the work done and
the
dry the
adjusters
place
have come
out.
in, the contractors have come in, the work's been done. But they're now going to turn around because they can recover this deductible against a strata lot who's responsible.
Okay.
And your strata lot was responsible, so they turn around. They will now send you a bill for this.
Now, Gordon, I see you are quite anxious to jump in here. Is it frequent that one individual is on the hook for the deductible, or is the deductible more likely to be shared among a few owners in the case of these disasters?
99% of the time, it will go to that one unit.
To that one person?
Yes.
The source of the trouble?
The unit owner.
Okay. Now, how do you, the unit owner, accused of, and probably guilty of in this case, leaving my washing machine on and wreaking havoc, so now I'm on the hook for 10 grand. Does my homeowner's policy, apart and separate from whatever the Strata Insurance carries, will my homeowner's policy cover the 10 grand that I'm now on the hook for starting all this mess in the first place?
It will, provided that it has that coverage up to that limit. Most policies do, but not all. So every unit owner should check with the broker to make sure that they have this coverage and what limit is being provided. And they should ask the broker, please show me on the policy where it specifies this and that limit of coverage.
Okay, and now extend the conversation one natural step beyond that. If there is no limit set, what would be a desirable limit that I, the homeowner, and the policyholder would want to see on my policy?
Well, they should really, I think most homeowners, if they're purchasing new content insurance coverage, or if they have existing, they should check on the Strata Insurance to see what that deductible is currently.
Oh, okay. Okay, so
Right.
Tony's nodding here. So it's two steps you have to do of homework here. You got to find out what the building's responsible for so you can fill in the remainder. Is that correct?
Yeah, and that's one of the obligations of the Strata is every year they have to provide a report on insurance to the owners.
Okay.
And so what that essentially means is they have to give a copy of the active policy to the owners. So the owners really should take their policy to their broker when they're buying their insurance, and then they can help to fill in the blanks of what may not be covered on that policy. And if the deductible says $10,000 for water escape, they're going to want to make sure they secure at least $10,000 of insurance coverage under their policy.
Right.
Not all policies cover the same values or same amounts, and there are limits in the industry. The industry does limit to $25,000 or $50,000, which you have to pay for an additional amount. That's the nice part, is that you can buy additional to cover up to these amounts.
Right.
The bad news is we have water deductibles out there that are $100,000 or $250,000 because there have been so many claims in buildings that the risks are so high.
Oh, and there's another part. You see, when I think of all of this insurance stuff, I always relate to my car. So I have the comprehensive, I'm covered, but I have to pay the first $100 or $300 or whatever. That's how I relate to coverage of any kind. I go back to my car. That's where I start, right?
Yes.
So, but in this case, when you've got, and again, let's use the brand new building. It's the best example because people expect perfection, if you will. Nothing's going to go wrong. The thing just got built, for crying out loud. How can anything go wrong? Gordon's smiling knowledgeably. Oh, you want
too.
Can I write you
Shall
a
we talk
long
about
list?
this?
That's right. We need to take a break here, but Gordon, just before we do, again, speaking to the individual Strata unit holder, looking perhaps more seriously at their coverage as they listen to us tonight, what checklist would you have that individual go through as they reach for their papers and go, gee, I wonder if I've got that coverage? What should they look for? What's most important?
Most important with regards to deductible size, that they need to look in the section of deductible coverage under the policy wording. Most policies, people, when you say policies, they just look on that page, what we call technically the deck page, will generally not show them that.
Right.
So they need to pull the policy wording and find a section that tells you about this deductible coverage and what limit. If they cannot find it, then I really suggest they contact a broker, ask them to refer to what page and what section so they could have that and see that in actual writing.
Right.
Because that's the actual contract when a claim occurs that adjuster is going to refer to.
Tony, is from your experience, and you've been around for a long time in this business, is it more often than not that people are unaware of the extent of their coverage?
I think that most individuals don't take the time to read the policy of the corporation, at least the summary, to understand what kind of personal liabilities that they have.
Right.
We certainly find that they're more enlightened or more aware when they have a mortgage, because the mortgage provider insists that they carry
Absolutely.
insurance, right?
Yep.
Because the mortgage provider is potentially exposed to these risks as well.
Right.
So they're in essence getting some force or some education to ensure that they have some coverage. But for the many of the people who don't have mortgages, who just don't have insurance, it's tragically too late when there's a major event in the strata, and then they're left paying a share of a very large deductible.
Right. Lots more on insurance on this edition of Quay Pacific's Talk About Strata here on AM 650. Guests are Gordon Lee and Tony Gioventu. I'm Stirling Fox, and we'll be right back.